The dollar is going to collapse. This is a disaster, which has been even worse, which is doing more damage. This is certainly an example of the cure being far worse than the disease. The dollar is going to tank. Last time the dollar went up. And the reason the dollar went up is because the Fed convinced everybody that QE was temporary, that it was an emergency measure, that it would never be implemented again, that the Fed was going to shrink its balance sheet back down to where it was pre-financial crisis, that it was going to normalize interest rates, and everything was going to be fine. And the markets were dumb enough to believe the Fed. Now, I was warning for years that the Fed was lying, that what they were claiming they were going to do was actually impossible, that you cannot lever the economy up and then take away the cheap money and expect the economy that was propped up based on cheap money not to implode. When the government creates inflation, it's another way of arriving at the same result, right? So the government prints money and gives that new money to somebody else. You still have all of your money, but now that somebody else has money, but that other person didn't do any work, didn't produce any goods or services, they just have money. And so when they spend that money into the economy, they're bidding up the price of the goods and services that you need. And so now the price is going to rise to the point that your consumption will be diminished the same way it would have been diminished had the government taken your money. But they didn't take your money, they left you with your money. They just took the purchasing power away from your money and gave that purchasing power to somebody else. So that is what's going on. This is massive inflation. The Fed is monetizing debt on an unprecedented scale. It's not just government guaranteed debt. When they were doing QE the first time or the first 3 times, they were only buying U.S. Treasury debt or mortgages that had been guaranteed by the U.S. government. So every debt instrument the Fed was buying was sporting a U.S. government guarantee to make good on the payments of the principal and the interest. What the Fed is buying now is municipal bonds with no federal guarantee. They're buying corporate bonds. They're even going down in credit quality. They're even buying junk bonds. But I would argue that a lot of the investment grade bonds that they are buying are actually junk bonds in disguise because Moody's and Standard & Poor's don't have the guts to put a real credit rating on these bonds. So they're leaving them at maybe BBB minus or the equivalent for Moody's. But an honest assessment of these bonds would put them in the junk category. And the only reason that a lot of these companies are not going bankrupt and a lot of these bonds aren't already in default is because the Fed is propping them up with artificially low interest rates and directly subsidizing the companies by buying their bonds. So the Fed is supporting this entire house of cards. Meanwhile, the underlying U.S. economy continues to deteriorate. It is a complete basket case now, not only thanks to COVID-19 itself, but thanks to the government's response. You know, the monetary and fiscal policy is what's going to make the economy much sicker. First of all, we have highly incentivized people not to return to work. The majority of people receiving extended and enhanced unemployment benefits are being paid more not to work than what they were earning when they still had jobs. Well, most people don't want to work. They only work to get the money. Well, if you can get more money and not work, hey, that's a great deal. In fact, even if they extend the benefits but diminish it so that you get paid the same amount not to work as you were earning when you were working, that's still a powerful incentive because most people don't enjoy their work, especially if you're a lower income. You're tolerating your work because you want the check. If you could stay at home and just stay in your pajamas and watch Netflix and make the same amount of money as if you had to go back and forth to work every day, get up early in the morning, get dressed, commute into work, and do a job that you hate, and then come back in the evening, if you could stay at home all day and hang out with your kids or your wife, if that's what you want to do, or your friends, most people would choose that than being part of the rat race. The financial crisis was kicked off because people defaulted on their mortgages. Well, now people are defaulting on a lot more than their mortgages. They're defaulting on everything. They can't pay their student loans. They can't pay their car loans. They can't pay their credit card debt. And it's not just Americans that can't pay their bills. Landlords can't pay their mortgage because they're not getting any rent. And even commercial landlords aren't getting rent. In fact, the whole real estate industry is imploding. Stores are shut down. Restaurants are closed permanently. They're not paying their rent. clothing stores, movie theaters, gyms, all these companies are out of business. They're not paying their rent. The commercial real estate market is imploding, right? At the same time, the residential real estate market's imploding. This is a disaster. Look at the banks. The U.S. banks continue to weaken. They're the weakest segment of the market. The only part of the U.S. market that's going up is a handful of overpriced tech stocks that are being bid up based on cheap money and momentum, and a lot of shorts being squeezed out of their positions. But if you look at stocks that are actually trading on fundamentals, like the banks, they're a disaster because people buying them realize that their earnings are going to implode because they can't collect on their loans. The people they loan money to can't repay them. And the collateral behind those loans is collapsing. They can't make new loans because they can't make any money because rates are at zero. So the banks are toast. All these big banks that we bailed out after the last financial crisis are in much worse shape. People are downplaying this. They think the banks are in better shape. They're not. The banks are in worse shape. We're even more vulnerable now than we were back then. Except what's ultimately going to crush the banks is going to be when the Fed loses control of interest rates and inflation sends interest rates higher, because that's what's going to happen. What's going to happen now is nobody is going to be dumb enough to believe, even if the Fed is arrogant enough to pretend that the Fed could ever normalize interest rates, or that the Fed could ever shrink the balance sheet, which is now over $7 trillion. The national debt is $26.5 trillion, headed to $50 trillion. The balance sheet is headed up to $10-20 trillion. And if the Fed couldn't shrink a $4.5 trillion balance sheet, how's it going to shrink a $10 trillion balance sheet? I mean, it's not even going to try. I mean, it's worse than impossible. And if the Fed couldn't normalize interest rates when the national debt was $16 trillion, how's it going to do it when it's $30 trillion or $50 trillion? See, the more debt we have, the harder it is to raise rates, and the more dependent we are on rates being at zero. In fact, pretty soon zero will be too high. The markets, we have so much debt that we can't even afford zero. We're going to have to make rates negative. So this whole thing is going to collapse probably before we even get to negative. The bottom's going to drop out of the dollar because we no longer have the expectation of normalization of rates, of a shrinking in the balance sheet. People are going to realize that the Fed is locked in this monetary roach motel. They should have realized it when I first pointed it out, but they'll realize it now. And then everybody's going to want out of the dollar because we have massive trade deficit, massive budget deficits. We have $3-4 trillion a year deficits, which will probably go up to $5 trillion a year plus in a Biden administration. There is no way the world is going to finance this. They're not going to divert all those resources so that Americans can have all this government for free. The rest of the world has their own problems. We were a rich country. We had rich people. Now we're a country full of paupers. Everybody is broke, and the government is giving them money. But here's something that people don't understand. The government doesn't have any money. If the people are broke, then the government is also broke. Because while it's true that the people support the government cannot support the people. But we're pretending the government can support the people because we've got the Fed. We got the Fed printing money. But the Fed can only print money that has value so long as the rest of the world is dumb enough to hold dollars as a reserve currency. Well, my bet is our luck has run out. That we've now upped the ante so much that there is no way. I mean, the world is going to back away from this. They're not going to continue. And you can see the dollar is already going down now. It's been a slow, steady decline. Soon it's going to turn into a complete collapse. I think when the dollar loses its reserve currency status, it's not going to be replaced by the euro. It's not going to be replaced by the yen or the Chinese RMB. None of those currencies deserve reserve currency status either. No currency should have that status. We need real money, just the way we had before the dollar became the reserve, and that's gold. And that's where we're headed. Gold's going to be remonetized. Gold hit over, we're over $1,800 an ounce, about a 9-year high in the price of gold. We're headed to 5,000-10,000, maybe more. We could go considerably higher. There's no way to remonetize gold in a meaningful way without gold being at least $10,000 an ounce, especially given all the money that's been created over the last decade. But when we go back to a sound monetary system, that is going to destroy an economy in the U.S. that is completely dependent on the reserve status of the dollar. That's the only way Americans can live beyond their means. That's how we can consume without producing. That's how we can borrow without saving, because the rest of the world produces for us. The rest of the world saves for us, and we just print money. Well, that privilege is going to come to an end, and we're going to have to deal with the consequences. But as investors, you need to know what's going to happen to asset prices in a world where the US dollar is no longer the reserve currency and where American citizens are forced to live within their means. And that means that US assets are going to be marked down considerably, led lower by the US dollar. And on a relative basis, assets in other countries are going to increase in value. So what you want to do, right, is you want to get out of US dollar-based assets before they're marked down and get into the other assets before they are marked up. So number one would be physical gold and silver. You want to own that pretty much instead of any currency. All currencies will lose purchasing power priced in gold and silver. So buy some physical gold and silver.